Ladies and gentlemen, apes of the ape army, it looks like we are getting a controlled sell-off today. Now, I want to go over exactly what that means. What does a controlled sell-off exactly mean? How low potentially could we go? What is probably going to happen with AMC earnings? We have AMC earnings here in after hours. We got some option activity to look at. We got the max pain to look at, but most importantly, the earnings revisions. This is something that can kind of give you a reference to go off of as to how much AMC has to actually outperform market expectations to see a rally off of earnings, or potentially if expectations are way high, they have to come in even higher. Now, we're seeing an interesting dynamic going on with the analyst expectations for AMC stock, and we are also down 6% currently. I don't know where we will close by the end of the day, but that's going to have a lot of implications as well for potentially what could happen after earnings are reported. So we are going to dive into all of this key information. If you guys find value out of this video, hopefully make some money, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the pinned comment for the trading group. Get in now while the price is low. You guys know inflation is hitting everywhere. So first things first, let's talk about the controlled sell-off. And I know everybody wants to talk about AMC earnings, and I sure should do as well because we have all been getting clapped, and we'll talk about that here in just 1 second. But AMC stock is down about 6% today. The S&P is sitting at 401.58, down about 2.37%. The NASDAQ is down over 3% today. Now, why do I say a controlled sell-off? Well, we've been trending down for most of the day. It's been very much back and forth. You've seen multiple sell-offs and then multiple little rallies just back and forth, inching down. We broke under 400 for about 4 minutes, and then the markets instantly caught a bid as soon as we hit 399.34. This is what I would consider a controlled market sell-off. You're not really seeing everything selling off at the same time. The stocks that I like to pay attention to when I'm scalping the S&P 500 is Apple and Microsoft. You could see that Apple and Microsoft kind of tend to do the same things, but on the 1 minute candlestick chart, they're doing kind of the complete opposite to a certain extent today. Microsoft is kind of holding up a lot better. It's kind of been flat this whole time, whereas Apple really was selling off into the ground. Now, Microsoft is the second largest weighting of the S&P 500 and the NASDAQ. So if these two stocks sell off at the same time, which they have not been today, that's where you get real market flushes in the S&P. That's the difference between the S&P going under 400 and staying under 400, or coming down, touching it, and coming back up. You really need to see Microsoft and Apple selling off at the same time, long story short, to continue to see a lot of downside pressure. If one or the other is doing the opposites, you don't really see that extreme sell-off here. So we'll see what happens by the end of the day today. We'll see if they all just start to sell off at the same time. But by and large, Microsoft is holding up very, very well. So I think it's going to be pretty hard to get that sell-off and sustain under 400. It does not look like the markets want the S&P under 400, at least right now. Situation could change around a little bit, but I think the fact that we went under 400 could serve as a little bit of, call it support or a flush out zone, like we've seen right here, right? You flushed out under 410 to a key level, bounce back up, seen a small little rally the next following days. Same thing down here. Pretty much every day you flush out, you tend to see small rallies after. Even look at, you know, this day right here, the massive reversal we seen May 2nd, you ended up rallying the next 2 days quite substantially, about 0.5% the day after, and then about 3% the day after that, and then you did come back down. So we'll see if we do see a retracement, if 399.34 is going to be potentially the yearly low, or if we're going to break under that in a substantial way. If we do, then look out below. Potentially falling as low as 380 is definitely here on the table, because we kind of just gapped up from 380 to 400 last time around. So if we break under 400 in a big way, 380 in my opinion, would be the next stop, especially if CPI is bad. That's really the next big catalyst that is going to send this thing home. There was a lot of optimism over the night tonight about potentially Russia kind of trying to declare victory over Ukraine, kind of slowing down their ambitions in Ukraine. That does not look like it is going to be the case. That is a big reason why the markets are selling off. And Putin actually said it's inevitable, a conflict between Russia and NATO. I think that's kind of being thrown under the rug right now, but it's definitely playing a role into the market sell-off that we are currently seeing. Now, tomorrow you have a lot of Fed speakers. You had Kishkari over the weekend. You had a couple other people coming out and saying, hey, maybe we have to go beyond neutral, which it's, you know, neutral is a term you'll hear. It's basically saying it's neutral as far as the Fed not really taking out accommodation or giving accommodation, which you could say right now, it looks like the Fed is taking away accommodation, but historically speaking, rates are still very low. But we are in this whole mindset of the economy cannot operate without 0% interest rates, because we're coming off of that after 2 years, kind of like being addicted to something and then trying to come off of it. It's harder than not in the grand scope of reality. You know, you're just weaning off of it like we're seeing here in the markets. Now, we are catching a little bit of a bid, but we're going to see, we got those Fed speakers tomorrow, and then on Wednesday, you have the CPI report. Those are going to be the two big catalysts. I would imagine CPI potentially could bounce the markets in a pretty extreme way, possibly up to about 425, if we can hold up 400 in the next day. Tomorrow is going to be the last trading day until we do get CPI Wednesday at 8:30 in the morning. So I think the real test is about 400 today. You could see one of those end of the day severe rallies, just extreme rallies. Would not surprise me, but I don't think there's a huge reason to rally back up to these pre-market highs like we've seen at 411. But then again, the markets are very irrational, and they kind of do what they want to do in the grand scope of things. Now, let's talk about AMC. Let's talk about everything that is going on right now. What is the data you guys need to know? The option activity as well as the analyst revision. So this is the part of the video that I want everybody to pay very close attention to. This came out earlier today at 5:31 a.m. in the morning. It says meme favored AMC Entertainment Q1 2022 earnings preview. It says cinema chain AMC Entertainment is scheduled to announce Q1 earnings results on Monday, May 9th after market close. The consensus EPS estimate is negative 67 cents, positive 52.8% year over year, and the consensus revenue estimate is $743.43 million, up 401.3% year over year. The exhibitor to benefit from big gains in an easy comparison with the first quarter 2021, with revenue about to jump fivefold. Now, this is what you guys really need to pay attention to. Well, not this part, but we'll read that here in a second. So it says AMC prospects continue improving. The company popped 5% after releasing positive fourth quarter earnings. Concerns: heavy debt load on its balance sheet, dividend resumption. The company paid its last dividend on March 23rd, 2020. So there is talks about potentially issuing a dividend. That would be a big problem if you have a short position on AMC, and you could see some kind of explosive moves based off of that. Not really what I expect, but it is possible. It is possible. I know Adam Aaron said it's not possible. If they are free cash flow positive and they have enough money to pay their debts and more, they could issue a small dividend. I don't think it's really in the cards, though, so I don't want to hype anyone up to that degree. But it says over the past 2 years, AMC has beaten EPS estimates 38% of the time and has beaten revenue estimates 88% of the time. So looking pretty good there as far as potentially beating the revenue estimate. This is key. Over the last 3 months, EPS estimates have seen 1 upward revision and 3 downward revisions. Revenue estimates have seen 0 upward revisions and 5 downward revisions. So what is this telling you? Well, essentially what happens is that last earnings AMC reported, they give a forecast kind of for what they expect this earnings. They said, hey, don't expect anything too crazy. We don't have really any big movies coming out. And the analysts run with that, and they kind of downgrade their expectations for the stock heading into the next quarter earnings. So you have seen 1 upward revision for EPS, 3 downward revisions, meaning 3 more analysts expect lower EPS from what they did 3 months ago. Revenue estimates, 0 people expect higher revenue estimates, and 5 analysts expect downward revenue expectations from the last 3 months. What this is telling you is that people are extremely bearish on AMC as far as the potential EPS numbers and the revenue numbers. So now it sets the bar a lot lower, because instead of seeing all these upward revisions, it's a lot easier to beat if they've been revising their estimates to the downside. So it's very, very possible here that we could be surprised with not only what AMC and Adam Aron says, but potentially the numbers. Now, I will say a dividend could be the difference between, a 5 or 10% pop and a 50% pop, for an example. We'll have to wait for the earnings call, because that's likely when that information would actually come out. So we will see. If you look at your phone later and you're up 20-30% on AMC, that's probably what it is, something to do with a dividend. But I don't know if sales and numbers were strong enough to actually get there. But the fact that they are saying that, concerns heavy debt load on its balance sheet, dividend resumption, and talking about the dividend, right, on March 23rd, 2020, the last time they actually paid one, kind of interesting. And AMC also does have a lot of cash on their balance sheet, but I wouldn't get too hung up on that. Nonetheless, I do think it's probably going to be a pretty positive reaction overall. We do tend to rally actually after earnings when everything gets said and done and it gets hashed out. AMC actually making a really big move right there, considering we were down 6% starting this video, and we did hit that low, $12.62 per share, now above $13 per share, which was the low back here before the 200% rally we seen. Again, after last earnings. So you don't really tend to rally the day of earnings or the day after earnings, but you do tend to rally the next 2 to 4 weeks after earnings, like what you've seen right here. Small rally right here, bigger rally right there, big rally right there before June, another rally right here. So you're pretty much like 4 for 5 as far as rallies after earnings. So the odds of a rally after earnings, pretty strong in my personal opinion, but not really too many expectations for the day after earnings, aka coming tomorrow. I think a lot of that's going to come down to actually what CPI is, and like I said, May 11th, which will be Wednesday at 8:30 in the morning. Now, on top of that, let's get into the Ortex data. We can see the option flow activity, 16 orders totaling $9.51 million, positive order value of 14%. Lots of put activity that is coming through. You are seeing some calls, but these hedge funds are kind of doing a straddle strategy here. They're playing the puts, they're also playing the calls. So essentially when you do that, you just have to see a big move one direction or the other. It doesn't even matter what direction it is if you play both sides and you get close to the money like these guys are. You guys can see here's one spending about $238,000 to the put side, about $203,000 to the call side. Look, 1,000 calls, 1,000 puts, right at the $13 strike flat for the puts, $13 strike flat for the calls. So that's literally strangles. It's kind of showing you there's a lot of indecisive activity. People really don't know what to expect, if it's going to move up or down. I'm not really getting a clear signal from the put or call activity on the option chain currently. Now, as far as the short interest of free float, sitting at 19.25%. Current shares that are sold short, 99.25 million, cost bar max of 3.3%, utilization of 100%, and days coverage sitting at 2.69. So situation here looking very much primed for a short squeeze, or at least the next leg of the MOAS, potentially if earnings are good. So interesting there. Nonetheless, we'll see. Earnings are going to be a big key. Max paying by the end of this week is $15 per share. That's kind of in line with what I expect if we do get good CPI, or if earnings are good, and this could potentially be a short-term bottom around 400 that we did see today. $15 per share obviously would not surprise me all too much. Now let's go ahead and take a look at the Stocko tracker, and then we will go ahead and wrap up this video and we can get on with our days. So for this Friday, you have about 1,200 calls that are in the money, 80,657 calls that are out of the money. That's about a 1-to-80 ratio. So there's obviously a lot more calls out the money than calls in the money. It's kind of laughable at this current state, where at the same time you have about 27,500 puts that are in the money, 21,000 puts that are out of the money. So more puts in the money than out of the money. If you do see a big move to the upside, you're going to see puts run from into the money back out of the money, and then you're going to see a lot of calls run from out of the money into the money. And that is that double whammy kind of gamma activity where, you know, on the put side, market makers have to short a lot of stock as these puts run into the money. When it bounces, they can actually buy back those short-term short positions. They have to hedge out these puts for. That causes buying activity. Same thing on the call side. You get that market maker having to go out and buy shares on the open market when those calls run into the money as well. So could potentially set up for a decent size rally here, but I think it's going to all come down to the external factors that we have mentioned here in this video. Markets are taking a little bit of move back down. Really just watch the $400 level. That's going to be the key. If we close under 400, yeah, it's going to be pretty rough in the markets coming over the next 2 days. Now, thank you guys for watching. That is it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Come join the trading group if you guys want to be a part of the action over there. You guys enjoy the rest of your day, and I will see you in the next one.